Hello guys, welcome to another video in my channel. In previous videos, we saw candlesticks and pivot points CPR strategies. In this video, I am going to explain how we can draw support and resistance lines in our chart and how we can trade support and resistance zones in our chart. In this video, I am going to explain what is resistance and support with some examples, different types of resistance and support, entry and exit using resistance and support with some of the examples. So these are the topics will be explained in this video. Before that, please like this video and subscribe my channel for upcoming day trading videos and technical analysis videos. I'm sure you will get good knowledge about resistance and support in this video. Let's get started with this video. First of all, what is support and resistance? The basic of support and resistance. Forget about stock market for 5 minutes. You can see a 3-floor building here. This is the ground level of this building and this is the ground floor. Here you can see some of the cars were parked and you can see this is the first floor. This is the first floor top and this is the second floor top and this is the third floor top, and they have some extra spaces at the terrace. So this is how this building has separated. This is the ground floor. I will mark it as the ground floor. This is the first floor, this is the second floor, and this is the third floor. Here you can see for this building the ground is the support and this is the resistance. If in case I wanted to move to the third floor, I have to take stairs from here and I have to go to the first floor, then I have to take stairs and I have to go to the second floor, then I have to take stairs and I have to go to the third floor. This is how I can move in this building. So as you can see, this is the ground floor, this is the base of the building, this is the ground base of the building, and this is the top of the ground floor. Let's consider this level, okay? Let's consider this level. You can see here, if I stand here and I can have the support at the ground. I am standing on the ground, so ground is the support for me. So what is the resistance for me? This is the resistance, because either I have to break this top of the ground floor and I have to move to the first floor. Otherwise I have to take the stairs, okay? This is how I can move from ground floor to first floor. So what happens? I was standing on the floor at the base of the ground floor and I took stairs and went up on the first floor. Now what is the support here? I am standing here, okay? Now I am standing here. Please don't mind the drawing. I am standing here. Now what happens? The top of the ground floor becomes support for me. Initially this was the support. The base is the support, and when I take the stairs and go to the first floor, the top of the ground floor becomes the support. Now what is the resistance for me? This is the resistance. If I wanted to move to the second floor, then I have to take the stairs and I have to cross this top of first floor and I have to stand here. So this becomes the resistance for me when I am standing in the first floor. Just imagine if I take the stairs and go to the second floor, then this becomes the support, because I am standing on the top of the first floor. Then this becomes the support and this becomes the resistance for me. Resistance means resisting from moving to the next floor. This is the resistance. This is resisting me to move to the next floor. For example, if I start jumping here, like I started jumping here, I just jumped here, came down, jumped here, came down. So what happens? I can jump till this level. I can jump till the second floor top. So this is the resistance if I start jumping, okay? So this is how you can think of support and resistance. Then if I take the stairs and go to the third floor, then top of the second floor becomes the support and this one becomes the resistance. Hope you understanding this. This is the basic thing of support and resistance. Let us see this in chart. So how this example can be implemented in the chart. Please don't mind the drawing. I hope you understood the concept. You will understand this concept with the chart. So you can see here, as I explained earlier with this building, you can see here there are some support and resistance levels in this chart. Now what I do, I will just extend the ground level of the building to the chart, okay? I just extended a line and top of the ground floor, I just extended here to the chart. Just an example, think it has an example, and top of the second floor, just a line, okay? I think this is in line, and you can see top of third floor in line with the chart. I just drawn a line here, okay? What happens? Initially what I told, I was standing here as a person. Now think about the chart. What happens in the chart? why support and resistance is formed in chart? Because of buyers and sellers. This is the demand zone. Demand zone means there is a high demand and people start buying it, and this is the supply zone. Supply zone means what? People started selling here. So this is the demand and supply zones in the chart. So only two things can be happen in the chart: demand and supply zones. Why demand and supply zone has been created? Because of the buyers and sellers. This was the resistance for this price band. So what happens once price break that support and goes to the next level? This was the resistance for this price now, because price sellers entered here and price made a downtrend, and you can see how price took a support here at the breakout level. So what happens, as you seen in the building example, you went from here. Now the top of the ground floor becomes support for the first floor. Okay, you're standing on the top of the ground floor, that becomes support for you now. So same thing happens with the chart. Once you cross the first resistance, that resistance becomes support when the price is making a downfall. So this will become a support for now. Okay, once buyers enter here and demand zone is created, again price started to move up, and here you can see the resistance line and price breaks it and price makes a upper move. As in the example of this building example, you can see you took a stairs and went to the second floor. Now what happens? The top of the first floor becomes support for you in the second floor. This is how support and resistance works. The simple thing is, when price breaks a resistance and once it faces a downfall, then that resistance becomes support. And same thing, if price break the support, then it becomes resistance for the price when it makes a uptrend. So this is the simple concept of resistance and support. So different types of supports and resistance. The first is indicators. You can draw support and resistance levels using pivot points, and even moving averages can also give some support and resistance levels, and other indicators also give some support and resistance levels in your chart. Whatever indicator you are using, on that basis you can understand the support and resistance levels for your chart. So the first thing is indicator. Usually I use pivot points and moving averages. Let us see how pivot points and moving averages can be a support and resistance levels in your chart. So you can see a Reliance chart here. You can see a naked chart. You don't have any support and resistance levels here. You don't have any lines here. Once I go to the studies and I just search for pivot points, you can see here, and I just apply that pivot points in my chart. Now you can see here how pivot points are drawn in my chart, and you can see how price is facing resistance at the support line and central pivot line. This is called as central pivot line and this is called as support line. So you can see here how price is facing resistance at the support lines, and you can see here how price is facing resistance at the central pivot range. So this is the easy way how you can get support and resistance levels in your chart. Pivot points are widely used by big traders, and this is how there are support and resistance levels in their charts. By using pivot points, you can get automatic resistance and support points in your chart. So again, I will show moving averages. I will choose 20 moving average. We'll mark this color in blue. Okay. So you can see here how price was facing resistance at the moving average line. You can see here price made a fall, and once moving average touched the price and again price fell down. Again you can see here again price took a resistance here, and once that moving average has been broken, you can see how price is taking support at the moving average line. So these are the automatic support and resistance levels using some of the indicators. The second type of resistance and support levels are previous levels. This is before the market opening. Previous levels, swing high lows, previous day high or low, supply and demand zones. Let us see in the chart. So if you wanted to mark swing highs and lows in your chart, you have to choose higher time frames. I usually choose 3-hour time frame to mark my swing high and lows. So you can see here price is facing resistance, that means rejections at this point. You can see here 1, 2, 3, 4, almost 5 candles made rejections at this price. So I will draw a line here. I will just draw a horizontal line here. Again, you can see here price was taking support at this level. So I will just mark this level with the horizontal line. And one thing in support and resistance you have to understand, you can break a wick and you can't break the body. You should not break the body, you can break a wick. Okay. Another important level you can see here is this point, because price broke this level, went up, faced the resistance and came back, and here you can see 1, 2, 3 candles faced resistance, then price broke here. I will just draw a line here. So this is the importance of support and resistance levels in your chart. So you can mark important levels like this for your nearest price levels, because 2102 is the last close, and you can see this range is the nearest support level for the price. So you should mark nearest support and resistance levels. So this is how you can mark swing high and swing lows. And another important level is previous day close and previous day high. So for the next day, this is the previous day low and this is the previous day high. I will just mark that level. So you can see here on daily time frame, I just marked previous day high and previous day low. So we marked swing high and swing lows and previous day high and previous day lows. Now we have to mark supply and demand zones. For that, I will choose 15 minutes time frame, so because it is very easy to understand supply and demand zones in 15 minutes time frame. So you can see here is a demand zone, because from here price made a upward move. So I will draw horizontal line here. So what is the nearest supply zone? This is the nearest supply zone, because price fell down from here and we don't have any other nearest demand and supply zones in this. So this is how your chart looks like for the 17th of March. So you can mark these levels accordingly, and we know price will not open with a gap up of 10% or 20% or a gap down of 10 or 20%, because unless and until there is a news, we can't expect that gap up or gap down, and we should not trade on the news or event days in the market. So whenever you do a technical analysis, you should always concentrate about technical things. You should not trade upon the news and events. You marked these levels nearest to the previous close of the price. Now price can open somewhere here in this range, and you can understand what is the support and next resistance level for the chart. You have to concentrate about 1:2 ratio, and you have to enter at one support and you have to exit at one resistance. So this is how you can trade. The third type of resistance and support levels are live market levels. Like when the market is on, when the market is going on, you should mark some levels in your chart for your intraday levels. That are initial highs and lows, consolidation ranges and breakout points. These consolidation and breakout points are almost same. I just separated these two things because for some beginners it might be really tough to understand. For experienced traders, these two things are same, consolidation and breakout points. These are the levels you should mark in your chart. Let us see in the example. You can see here, this is the chart of 4th March. You can see here price was in a range of initial high and low. What I mean by initial high and low? Initial high and low is the high and low of the price at the first hour of trading, like till 10 or 10:15, 10:30. That are the initial high and low for the price. So you can see here, this is the initial high, this is the initial low for this price, because price went up and came down till this point and price again made a uptrend move. So I have to just mark this initial high in my chart in the live market, and again I have to mark this level for my day. So this is the chart of 4th March, this is the chart of 5th March, this is our day, and you can see here I just marked these levels, and you can see here price went up and made a high, its initial high, and price came down. Again price took resistance at this point, made a low. Again price took a resistance at this point, made a low. So this is the importance of initial high and low in your chart when the market is live. You have to mark these levels whenever you see these initial high and lows. Only on sideways days you will find these initial high and initial low levels. Let us see another example. You can see here, this was the initial high for this trade on 12th of November. You can see here, I just draw a line here. I just draw a line here, and this was the initial low for the price. I just draw a line here. So I just draw a initial high and initial low for this price on 12th. This is the chart of 13th. This is our whole day. So you can see here, price made a upside move, and at this point took a resistance, faced the resistance and came down. Again you can see price made an uptrend move, but it faced the resistance at the initial high level. This is the high and low of the stock in between 9:15 to 10. This is the range of the stock at 9:15 to 10. That is why this is called as initial high and initial low. You can see here, for whole day price was in that range only. You can see here price went up and came down here also, and again here also you can see, as I told earlier, you can cut through a wick but you can't cut through a body. You can see here price didn't broke this initial low, and again price made an upside move and closed at this level. So this is the importance of initial high and initial lows in your live market. So let us see another example. Here also you can see price made a low at around 9:45 or 9:30, and you can see this is the low of the price, that is called as initial low, and this is the high of the price, that is called as initial high, because price fell down from here. So I will just mark this level before 10 o'clock only. I will just mark this level. Okay, I can mark this level in my chart. So what happened, price came down and made a low here, initial low. Again you can see price made an upside move, price faced the resistance at the initial high and again came down, and price was consolidating, and you can see here price took again support at the initial low of the day, and again price made an upside move and break that initial high and made an upside move and closed here at this point. So this is the importance of initial high and initial lows for the current day, for the live market session, and for the current intraday trade. You have to mark these levels in your chart. And this is the example for consolidation ranges. For a day of 3rd March, and this is the chart of 4th March, this is our day, this is our live market day for example, and you can see here price was in a consolidation range. Price was in a consolidation range till 2 or 2:30. Price was in this range only. Okay, price didn't made any upside move or anything like that. But at around 2:30, price broke this level, and you can see how big was the move. How big was the move? You can see here. So you have to mark these ranges. You should have marked this range till 2 o'clock, and you would have waited for the breakout either at this side or either at the downside. Once price break this level, you would have went short, and once price broke this level, you would have went long, because it was a big consolidation range and breakout will be huge, because this was very big consolidation from opening of the market till 2:30. Price was in a consolidation range, and once price broke this level, then you can see how big was the move. Okay, so this is why you have to mark consolidation ranges. Let us see another example. Here you can see this is also like initial high or initial low levels only. This is the chart of 4th June, and you can see this is our market for the 4th June, and you can see here this was the first candle, this was the 9:15 candle, and this was the initial low or initial high, or you can call it as a consolidation range, because price was in this range only for till around 10:30. You can see here price was under this range only till 10:30, and you can see once price broke this level with a huge Maribozu candle, and you can see how big was the move, how big it is. You can see price went up with big bullish candles, and you can also see here price retested at this breakout level. So this is the importance of consolidation range. You would have expected a big downfall move if price closed below this level at around 10:30. Rather than this point, if price closed below this level, then also you would have went short here with good profit. So that is why you have to mark consolidation ranges. So again we will see some breakout level examples. This is the breakout, clear breakout. You can see here, this is the chart of 12th January and this is 13th January. So this is our day for a live intraday session, for example. So you can see here, price made a big bullish candle and price was at this level. Price was not making any move. Price went up, came down, went up, and price was at that level only. Price was not even going down also. Price was at this level. Price was facing some resistance here. I just draw a line here. My concept is clear. If price break this level, I will go long. So what happened? Price made a big bullish candle and break that level, and you can see here how big was the move. And again you can see here price retested that breakout level, and here also you could have entered with a stop loss below this breakout range and you would have got good profit with this trade. So this is why you have to mark breakout levels also, because what happens when price made a big bullish candle, you could not get some entries because stop loss was big. Stop loss was really big. You would have entered here. Stop loss should be here. So what you should do, you should wait for the retest of that price at the breakout level. Then you can get an entry. So it is very important to mark breakout levels in your live market session. So this is how you can mark breakout levels and enter at a retest point and make good profits with small stop loss. And again you can see another example here. You can see here price was making big candles and price was in this range only. You can see here price tested here for second time also, that is the initial low, and you can see price tested here for the third time also. Again you can see here price broke this level. So what happens now? This line becomes breakout line. I will just extend this line for the day. You can see here this is the chart of 18th February and this is our day. And once price broke this level, you would have marked this level for that day, and you can see price went down with big candles, and you might miss this trade. So what happens if you marked this breakout line, then you got a chance here to enter with the retest candle. You can see here huge rejection, and if you entered here with a stop loss here with a small stop loss, and you would have got good profit with this trade. So this is why breakout lines are important in your live market sessions. So this is also a support and resistance levels in your chart. The concept is you should not only rely on previous levels like previous swing highs or previous day high and lows. You should mark current market levels also to get good trades for the day. Hope this video was good. Thank you for watching this. Please like my video, please subscribe my channel, please comment your opinion, and please do share this video so that I can make good videos, I can make good technical analysis videos, and I can give good knowledge about technical analysis, and I can share good secret strategies with you for a free. So please subscribe my channel. Further day trading videos and further technical analysis videos. If you have any suggestions and if you have any opinion, please do comment in the comment section. So thank you so much for watching this video.